Good morning, everyone. Welcome to another RF crypto video. I think today we can breathe a little bit of a sigh of relief. The global crypto market cap bounced back from about 1.5 trillion to 1.72 trillion, which is an 8 to 9% increase from yesterday. Remember that yesterday's crypto market dipped by almost 12 to 13% due to Russia's special military operation in Ukraine. But since yesterday, the markets have recovered quite nicely and they are almost at the level that they were before yesterday's dip. So as you can see, the whole market is basically up by 7, 8, 8. Terra is up by 26%. It's recovered its losses, if you can see here, and it shot up by more than what it was yesterday. So Terra is doing very, very well under these circumstances. If we look at the top 50 coins, we see everything is on the green. We don't see a single red dot, except for obviously your stable coins, which fluctuate on a daily basis or on an hourly basis, but everything seems to be on a positive note. Looking at the Bitcoin charts, we see that it briefly touched the 34,900 to 35,000 support level and it bounced back. This massive red candle is most likely when Russia started its special military operation and started moving aggressively, and also some of the long traders got liquidated, so that's why the red candle is so large. But ever since it touched the support level, the bulls got into play and bought up the dip. But it didn't buy up the dip significantly, it just bought up the dip so that the price went up to 36,000. The reason why the price went all the way back up to 39,776 at its peak is merely because Joe Biden said something which calmed the markets and basically sent a signal to the markets that chances of World War III happening are slim to none. And this comes from his quote that says, US troops will not be sent to Ukraine to take part in the conflict. Our forces are not and will not be engaged in the conflict. They're going to Europe not to fight Ukraine, but to defend our NATO allies and reassure those allies in the East. Joe Biden ended off by saying that, to be clear, this is a defensive move, is not an aggressive move. And this put the markets kind of like in a more relaxed state, simply because the sell-off that happened yesterday, which caused this massive red candle, was fears of a massive escalation between Europe and Russia, or between the US and Russia, or NATO and Russia. And the biggest fear there was nuclear weapons. People started selling off and buying gold and obviously stockpiling on oil, as we saw from their massive price increases, because they thought that an escalation would happen, a further escalation would happen. But once Joe Biden said those words, the markets picked up. And the markets didn't stop picking up at 37,000. It went all the way up to 39,584 is because of these liquidations. 394 million, almost $400 million worth of cryptos were liquidated in the last 24 hours. What this tells you is that a lot of leverage positions got wrecked or got liquidated and the positions went to zero. And this directly correlates with this drop in leverage in the market. So the leverage was 0.2077 and it went down to 0.19. This is a massive drop in leverage. And it's counterintuitive because when leverage drops, the price usually goes down as well. But at this point, if you see the purple dot and if you see the black dot at the bottom, which represents the price, if I move forward, a decrease in leverage caused the price of Bitcoin to go up. Why did this happen? It's because the majority of the liquidated positions were short positions. Obviously, when Bitcoin started to drop massively due to the conflict, the main thing that went to people's minds is that this is going to escalate even further because this puts tension between countries and it's the biggest war in Europe since World War II. And with that, they thought that, it's going to get out of control. So they thought that the price of Bitcoin would go down even further because the markets are going to go into turmoil. So the most logical steps for people who wanted to make a quick buck or for people who wanted to leverage their money is they entered aggressive short positions. This wasn't the case. When Joe Biden said that we're not going to send troops to Ukraine, the price went up quite aggressively. And when the price went up quite aggressively, all those short positions that hoped that the price would go down, they got liquidated. And that sent a positive signal to the market in the sense that the price will tend to go up and that the short traders were wrong. So it caused this green candle, and this green candle. And if you can see, this green candle is massive. it was a almost $2,000 increase in the price of Bitcoin. And to prove that a lot of these positions were big bets that the price would go down, the biggest liquidation that happened was $7.95 million. That's just one position that got liquidated, and this is most likely a short position because it happened within the last 24 hours when the prices were already suppressed and when the prices started to rise again. And looking at the longs versus short ratios, if you look at the last 15 minutes, people are more in long positions than in shorts in almost every single exchange. So this means that they expect the price of Bitcoin to go up. And I think that leverage is going to go up again after this massive drop. If most of these new positions are long, and if the price of Bitcoin goes down due to a further escalation in this conflict, then we shall see the price of Bitcoin tumbling down more than what it did now. And in an article by Cointelegraph written by Jordan Finnesseth, we see that he quoted Angelo Doge from Twitter. He's quite a reputable analyst or a self-named analyst. There's a low chance that Bitcoin holds the 33,000 on a second visit, and sometimes things need to get worse before they can get better, which happened yesterday. If there is a support failure, or in other words, if the price of Bitcoin goes down below the $35,000 level, it can go down all the way up to $25,000, which is the next Bitcoin support level. And he actually says, hope for the best, prepare for the worst, and stay off the leverage. Stay off the leverage or you might lose all your money because the prices are very, very volatile now in either direction. We don't know where the prices are going to move. And in that case, it's better to be safe than sorry. If you want to invest, not financial advice, I must say this, but it's better to invest in spot rather than leverage just to be safe. At least if the price goes down, you can make some of your money back, as opposed to if you go into a long position, the price goes down aggressively, your position might go to zero. But that's it for today's video. Thank you very much for watching. Let's keep an eye on this Russia-Ukraine situation. It's sad what's happening, and hopefully everything gets resolved pretty soon. If you liked the video, please leave a like, please leave a thumbs up, and share the video with your family and friends. Invest wisely, and cheers.